Welcome everyone. Bonjour à vous tous. The M&A Club has presented 54 webinars since April 2020. The presenters, topics, and attendance keep growing, and in the coming months, we will continue to represent the very best of our profession. Today, the M&A Club is proud to bring you valuable insights into the outlook for M&A in 2021 from three of the top business leaders in Canada who drive business transactions and activity in the mid-market. Vice President of Commercial Banking, Quebec region, and responsible for all commercial activities in Quebec. To round out the scope of her involvement, let me add two areas where Maria contributes to M&A outside of her day job. She is on the advisory board and is a jurist for the Scotiabank Women's Initiative, and the M&A Club Advisory Board counts on Maria's contributions as an active member. It gives me great pleasure now to turn the talk over to Maria, who will introduce the conversation today.
Well, hello everybody, and thank you for dialing in. So this is a Quebec-based M&A event where we would normally be delivering it in French, but I understand that we have participants who have dialed in actually from coast to coast, from BC, Calgary, GTA, and I think as far east as Halifax. So we will be delivering this in English today, but as Laureen said, we encourage you to ask questions in either English or French, not a problem. So I'd like to take a moment to introduce our speakers. There's Nicolas Marcoux, who is the Chief Executive Officer and Senior Partner of PwC Canada. Nicolas began his career with PwC in 1989 and was admitted to the partnership in the year 2000. Prior to becoming CEO, Nicolas held a number of leadership roles within the firm, including National Managing Partner of Consulting and Deals and Montreal Managing Partner, as well as Managing Director of PricewaterhouseCoopers Corporate Financing, where he specialized in M&A. He's also helped clients complete over 150 transactions in over a dozen countries. And Nicolas is also active on the boards of Youth in Mind, Montreal Symphony Orchestra, Alpine Quebec, and the Sherbrooke University School of Business Foundation. En 2018, il est devenu le premier Canadien francophone à être nommé à la tête d'un Big Four. En plus de ses responsabilités au sein de PwC, Nicolas est actif dans sa communauté, comme en témoigne sa participation au conseil d'administration de nombreuses honors at the 2019 M&A Awards Gala, at the time when we actually had galas in Montreal, and is a longtime supporter of the M&A Club. Welcome, Nicolas. I'd also like to introduce Jacques Foisy, who is the Chairman Managing Partner of Novacap Industries. Jacques Foisy is a chartered accountant and holds a business administration degree from HEC Montréal. Jacques a débuté sa carrière chez KPMG à Montréal et par la suite, il a travaillé pour le groupe Olympia, une société de transformation de la viande pendant plus de 12 ans. Grâce à son implication dans de nombreuses fusions et acquisitions, il a permis à l'entreprise de devenir le plus important transformateur de viande de porc au Canada. Cette entreprise aujourd'hui est connue sous le nom de Olimel. Il est également vu octroyer le prix Arista pour ses réalisations personnelles en affaires. Jacques sits on the board of directors of many Novacap Industries portfolio companies and has had the privilege of contributing to Novacap's growth, which grew from 34 million of assets under management when he joined in 1994 to more than 3.6 billion of assets under management today. Jacques has been the MC for the M&A Awards Gala since 2018, and Novacap has been a sponsor since the early days of the club. Bienvenue, Jacques. Welcome, Jacques.
Hey,
everyone. So, hi, Nicolas. Hi, Jacques. And thank you for taking time today from your very busy agendas to spend the next hour to look at, the post-pandemic economy and to think about how it's shaping the M&A activity. Your points of views are of interest because of the number of transactions you are both seeing and as a result of the roles that you occupy. I thought that today we could explore a number of emerging trends in investment activity, in valuations, value creation, deal structuring, due diligence. Hopefully we'll have enough time to touch all those subjects. And I think it would be interesting from both your perspective, Nicolas, being in advisory, and from your perspective, Jacques, being in private equity. So, prior to the pandemic, buyers were looking for acquisitions, and these buyers were sitting on records amount of dry powder. They were running into intense market competition and really high valuations. And from the onset of the pandemic in March 2020 and throughout the summer until just before the end of the summer 2020, the M&A deals came to a standstill, and most of them were put on pause and were actually non-existent. So, Nicolas, from your advisory perspective, are you now seeing M&A activity accelerating? Are we back on a return to a new normal market conditions? And if we are, what is driving deal activity despite the uncertainties that we're seeing today, like the second wave of COVID, global trade tensions, regulatory pressures, and also the presidential transition in the U.S.?
It's a long question. Can you hear me okay, Maria?
I can hear you fine. Yes, it's a three-piece question.
Perfect. So first, I'd like to thank you for moderating this conversation, and I'd like to thank the M&A Club for having me today. It's great to be here with all of you, even in a virtual environment. So, maybe, when we think about outlook for 2021, maybe we take a look a little bit in the rearview mirror, and I've got a couple of slides here that I'd like to share with everyone. So on this first slide, what you see is really the amount of deal activity, both public and private, over a 15-year period. And when you consider that in 2020, as you mentioned, Maria, we basically shut down the deal activity from March 15th to almost June 15th. So this number here that we have of where you see the 1,300, it's actually running on 3 cylinders instead of 4. We only had activity for 3 quarters. What we saw in the back half of 2020 was the deal size increasing as well as the volume. And if you look at the second slide that I have, it's you can see that on the public M&A, it was actually down quite a bit compared to 19, which really bodes well vis-a-vis what we're talking about today, which is mid-market M&A, and that activity was extremely robust on the back end of 2020, which bodes well for 2021. So, and why is that? Well, private equity firms are sitting on huge amounts of liquidity, so are corporates. So there's a lot of cash in the system. Interest rates remain extremely low. Government support has been also very beneficial to the deal market. And at PwC, we've come out with a point of view vis-a-vis the U.S. economy as well, under the new Biden administration. So, talking to our U.S. colleagues, it is clear that corporate earnings in 2021 will be very, very strong for companies that are outside, obviously, of travel, leisure, and entertainment. But for the manufacturing sector, services, technology, corporate earnings should be record levels in 2021. We're also seeing that, unfortunately, protectionism is here to stay. The new administration will be focused on preserving jobs in the U.S., and that's not going to change from the Trump administration. ESG is going to be back on the political agenda, including climate change. There's going to be a lot of money injected in the U.S. economy, but with that will come also more regulation. So the Democrats are known to have more regulation. More regulation means more litigation and a less business-friendly environment. When we looked at the Biden appointments, it would appear that most of them are very much towards the center and not towards the left, which is very encouraging from a business standpoint. The one thing I would note, though, is that there were very few, if not any, business people in his cabinet. So again, it will be a bit of a less business-friendly environment in the U.S. But really good, robust M&A market from our perspective at PwC.
Well, thanks for that insight, Nicolas, and for indicating the robustness of the mid-market M&A. And along that same vein, Jacques, I'd like to ask you, since August 2020 and throughout December 2020, Novacap has actually been quite active across its 3 sector-focused funds. That's industrials, financials, and tech, media, and telecom, both at the Novacap fund investment level and at the portfolio level. So from a PE perspective, how have you adjusted your investment strategies to be opportunistic during COVID? And what changed that caused Novacap's and its portfolio companies' confidence to increase?
Okay. Well, for sure, 2020 has been a hectic year with a lot of action. For sure, as you've mentioned, we've been active in all three sectors, TMT, financial services, and industrials. In general, TMT and financial services sectors were pretty resilient during the pandemic, and there was a lot of deal activity. In particular, we made a lot of deal in these sectors, and between August and December, the last 5 months of the year, TMT acquired one platform, made 2 add-on acquisitions, and brought Nuvei public, which was the largest tech IPO in TSX history at US $833 million. And like Nicolas mentioned earlier, I guess this is one of the many future IPOs that are coming, and there will be a couple more in 2021. In the financial services side, that was a new fund, which we had a first closing in December 2019. They made their 3 first portfolio investments during COVID after the August period. And on the industry side, businesses, manufacturing companies, distribution businesses, business services, we acquired 1 platform and made 4 add-ons. So in total, that represents 12 transactions closed over the last 5 months of the year during the pandemic crisis, which is a pace of 2.4 deals per month, which honestly for our group is a lot of activity. On the fundraising side, while the pandemic was growing, our financial services fund and our TMT6 fund were both raising a new fund. We could have assumed that this would have been, would have impacted the level of fundraising. It was a little like that for the financial services fund, which was a first-time fund in the Novacap family, so it did slow down a little, but still we believe they'll meet their threshold. But it was not the case for the TMT6 fund, 6th generation, which raised a 1.8 billion record in a record-breaking time, 1.8 billion US. I'd say for fundraising, the major impact of COVID was that it was mostly all raised virtually. And I believe that this will become a new trend in fundraising in the future. During a 3-4 month period, Pascal Tremblay, the managing partner of the TMT fund, went to Asia, Europe, North America, South America from his home, and raised money without having to take 1 plane. So that is quite impressive, and I would say a new trend for fundraising, and that will save a lot of time for both sides of the fence, the PEs and the LPs. To your comment on adjustments of the overall strategy, I'd say for fundraising, there was no change in our strategy. What our SIMs reflected stayed in the SIM, and we believe that through time this will remain the case. On the portfolio management side, that's where it was there was a lot of action, and I'm talking about all the funds. Like everyone, we were shaken by the COVID-19 in March and April 2020. Visibility was very low as to the future outcome of many of our businesses. So in March, we took a very aggressive approach, corporate-wide, to protect our investments. We classified our portfolio companies into 3 colors: red, yellow, and green, which I guess you can understand the definition. And on the industry side, there was a lot of red and yellow, which translated in a strong drop in valuation in the early months of the year. Of course, our valuation was done on a conservative basis due to some businesses having shut down completely, others partially, or having to slow down because of their customers shut down. So it was stressful times. To give you an idea, between March and August, during the first months of the pandemic here in Canada, the percentage of green portfolio was below 1/3 of our portfolio companies, rose to 60% in August, and it has continued since then to go upwards. At the end of the year, we had a significant valuation upside compared to last year, which was pre-COVID. and recuperated all the downside impact in the early part of 2020. So it was a tough period. For sure, in the first 4, 5, 6 months, you didn't think about making acquisitions. You were thinking about saving the businesses. So our aggressive approach consisted in monitoring 5 major elements on a weekly basis. Employee safety, which was the #1 priority, employee safety across all our portfolio companies. Liquidity preservation was a close #2, because we could see that there were all sorts of ways that liquidity was affected. Customers not paying, sales not showing up, etc. We monitored sales trends, cost control initiatives, and operations and supply chain issues, which became important. That gave us a good confidence that, you know, our control over COVID-19 was going to give us some strong results at the end of the day. It gave us confidence that our strong management teams responded well to the challenge. We could count on the support of the lenders. And like Nicolas mentioned, there was governmental support and measures that could help us streamline some of the activities for a certain period of time. So we were all in the same boat, but we felt that we were in an overall good position.
Okay. Thanks for that. It aligns also with what we were experiencing on the banking side in regards to the first part of the pandemic. So just to continue in terms of the level of confidence that came back in the latter part of 2020, just you know, maybe for curiosity for a lot of the listeners, and we're always thinking about what our neighbors in the US are doing. So south of the border, did the PEs have the same level of confidence in terms of M&A activity? Were you seeing that? And then conversely, were you seeing a lot of the US private equity firms migrating north for investment opportunities in Canada?
Everybody in the first part of the year were all focusing on their portfolio companies. There was, and the banks were much more prudent at the beginning of the year, sorry, because also they had their own issues with all the loans that were out there. As Nicolas mentioned, 1.5 trillion of dry powder in December 2019, and I believe it has continued to grow during the course of 2020. There's a lot of cash out there, so people continued to look at deals, but you know, a lot of businesses did not show up in the first period of the year. Too much turbulence, not enough visibility, and started to show up in the second part of the year. And yes, there was traffic. Now, the problem with the dry powder issue is that too much cash can generate a lack of discipline in some sectors, and many players will fight for the same deal. There were not that many deals in August, September, November compared, and it's increasing on a regular basis, but there were not that many deals. And the fact that they had to limit themselves to their territory, you know, I believe there was less activity. Today, all the investment bankers we talk to say they're full of deals in the market and potential deals coming up. I cannot say though, Maria, that the US PEs are coming to Canada at this time that much. They'll tip their toes, but you know, the travel restrictions don't help, and they've got enough on their territory to keep them busy.
All right.
I agree with Jacques. Like lots of people chasing very few deals. When we're on the advising the seller, we like it, Jacques. We don't mind it when there's a whole bunch of people fighting for it. It's actually not that bad.
It's good for Nicolas. So Nicolas, we're seeing you know, a lot of rich valuations because of the competition, and a lot of buyers looking for almost the same assets, digital technology-based assets. You know, they're pursuing them. They want them at high multiples. So, sorry, at high valuations, I'll say. But in your view, and from an advisory perspective, what would you say is driving these high valuations? And is there a lot of back and forth because of the pandemic and maybe, you know, sort of trying to establish baseline EBITDA? Are you seeing a lot of negotiation on these evaluations? And how do you, as an advisor, fix it? so that it's fair.
Well, maybe Maria, before I do a deeper dive into the question, I'll actually share another slide here on valuation data just to support what you were saying. So if you look at the graph on the left, it's basically all of the indexes in North America, and the dip you see is obviously around March 15th when the markets cratered. What happened during that time is everybody went out to chase debt. And there were record weeks of debt issuances in North America because money was free. And for example, I have one of my clients who ended up raising $5 billion worth of debt because they figured that they could do much better investing that money vis-a-vis the spread of the cost of the capital. So, and then the other phenomenon that you observed in the graph on the left is the spread between NASDAQ, so i.e. technology companies, vis-a-vis more traditional companies, which are the bulk of the rest of the indexes. So, and you can see that spread just widen as time has passed in the past year. And it's really driven by the Amazons, the Googles of the world, and Salesforce, and all of the technologies that help companies go to B2C, B2B, move on their online strategies. And we think that's going to continue in 2021. And the other thing that I'd also like to point out on the graph on the right is, to Jacques' point in your question, like we've seen multiples inflate steadily in the past 2 years, where almost like 4 turns of EBITDA, which is quite significant. And if you go to the last slide I have here, which is probably the most important one as far as the M&A market, is all of this dry powder that's out there. As Jacques referenced, like 1.5 trillion. So, my daughter was asking me, how much is 1.5 trillion, Dad? And I said, it's a lot. Like there's a lot of dry powder out there. And so you couple that with a lot of dry powder, a lot of people have raised a lot of free money because of debt. So there's, that's why there's a lot of capital out there. And that's why at PwC, we really believe that this will be a deals-led recovery, right? Because we're in an environment of low cost of capital. That's why we see the multiples keep rising. There's also, I would say, an increased confidence in the economy. Because of all of the stimulus that's out there, the new U.S. president. Hopefully, we are going to be successful in rolling out these vaccines, and the number of COVID cases will fall. I think the governments are kind of stuck where they have to continue the government support until we get to some sort of new normal. And that's why at PwC, we really expect that valuations will remain strong, and so will deal volumes and values throughout 2021. So when you look at, to your question on what does that do from a negotiation standpoint, I can tell you that in March, it was just everything stopped, like a screeching halt. And when we look at 2021, we're saying, well, 2020 is not a normal year, so we have to spend a lot of time on future cash flows and making sure that we're looking at quality as far as those future cash flows. So spending a lot of time on forecast assumptions, and really buyers are being extremely diligent and doing a lot of work as far as their downside scenarios to make sure that they're protecting their bids, to make sure that will these scenarios hold up once they buy the company. So a lot more scrutiny, I would say, on forecasts and on diligence is what we're seeing. And as you can see from the deals market, buyers and sellers are agreeing on a price, and deals are happening. It's almost like COVID never happened from a deals perspective, I would say. And I'm sure you're seeing that in your portfolio at Bernard as well, that the activity is quite robust.
Yeah, and I would add, Nicolas, that before, you would have a SIM, you would look at the different adjustments to EBITDA, and you would discuss these adjustments, you accept them or not, you diligence them, and now you've got permanent and temporary adjustments, positive and negative. So a major increase in sales doesn't mean that it's a major increase in sales. It can be COVID related and it'll go back. It's very hard to see through all that. So it does complicate your life and ours when we want to look at a business clearly, because even the owner doesn't know. Of course, in some instances, it's clear it's going to be a permanent thing, but it's a bigger challenge.
Yeah, yeah. It's also a challenge on the lending side when you're trying to establish the sustainability of those top lines and the EBITDA as well. So thanks for those comments. So, you know, we're seeing high acquisition prices, high multiples, just like you both indicated. And then from a private equity perspective, you know, there's always the need to boost returns because, you know, there's that need to create sort of a proactive value or to create value as you make an acquisition. So, you know, when you're looking to deliver financial outperformance for your investors, you know, what are the new ways that you're looking at to sort of create this value, Jacques?
That's a good question. For sure, currently expected returns have gone down in PE investment overall. And what I mean by that is the LPs sort of accept, in general, a lower return perspective because it is still higher than most sectors. So in comparison, a 15 or 20% return is better than a 25% return. And that's a combination of the dry powder that is exercising a lot of pressure on the need to invest of certain funds. And again, the fact that, you know, alternative investments offer a lower return. But in the long run, the PE to remain pertinent to keep their hedge must continue to target and deliver returns. And that's what we're working on at Novacap. We want to make sure that our returns are constant, and delivering financial outperformance to investors does become an increasing challenge for the things we mentioned, such as EBITDA multiple, etc. So what do you need to do to have that performance maintained? You have to have a greater sense of urgency when looking at targets. For sure, as always, management remains a key success factor. I believe that in the post-COVID era, there will be a lot of aging entrepreneurs that will say, you know what, this was fun, but I'm hanging my cleats and I'm going home and I'm looking to sell. That's going to become another factor in the purchase of businesses. And because then you have to make sure that management in place is strong and that the leader leaving or the leader is leaving, you still have a good management team in place. 100-day plans, value creation playbooks, strategic planning, sales playbooks, succession planning, they all have to be planned, I would say now, with more precision, more detail, to really identify the trends rapidly that are developing. Yes, COVID has changed a lot of things, and we don't know to what extent. We've had a lot of strong businesses performance in recent months because they were addressing the stay-at-home workers, because of food, because of healthcare, etc. But what are the permanent trends of these businesses? You have to look at those trends very closely and adapt. The growth vectors must be scrutinized, and there's those increasing threats that have been identified, which can lead to downward returns. One major one, which was much less present in recent years and even in recent months, cybersecurity.
Yeah.
The supply chain risks have increased dramatically because of the globalization, well, the new world concerns. The lack of sufficient robotization and digitalization, I love those two words, that's a big challenge for many businesses, and one that is growing, labor shortages. So there's a lot of things that can affect a business. Now, that's why, as I mentioned earlier, we have to stay close to those playbooks. We have to know how to move the businesses, where they should be, how they have to prepare for all those threats, and be very reactive.
So would it be fair to say that when you're actually looking to buy a company and you so let's say before COVID and now after COVID, that the evaluation of those threats in the target company, if they're not well identified or handled, or there's no playbook, let's say, that would impact the, let's say, the price that you're willing to give for that target? Would that be fair?
Yes, it could go as far as being a deal breaker in some instances. Now, of course, that's not the plan. If we like a business and it's got a lack of digitalization, et cetera, we'll see how it can be fixed, et cetera, what we can bring to the table. Fortunately, we've got a TMT team on our side, so they can help us out also. But yeah, it can have an impact, definitely, if really they're unprepared and have no vision of doing so, and the industry is too much dependent upon it. There are businesses where they have no digitalize. I tell you, I love these words. Digitalization, which won't bother us, and we'll invest in them because it's not a prevalent problem. It's coming, but it's not there yet, and we can prepare for that. It's the timing of where they are compared to their competitors, et cetera, that yes, may affect pricing for sure.
All right, thanks for that perspective. So Nicolas, with so much capital out there and good businesses, being able to command higher multiples and being able to actually get those multiples, doubling down on value creation seems even more relevant to have a successful M&A transaction, just as Jacques said as well. So how does PwC help its customers or its companies navigate these challenges?
Well, Maria, value creation is actually one of our fastest growing businesses at PwC. And because, I firmly believe that it's not the company, it's not important what you bought, it's more important what you plan to do with it, right? Because just buying a good company is not enough today. It's what are you going to do with it? So we're assisting companies and private equities to provide a perspective on their business strategy and their M&A plan to create long-term value. And this kind of means challenging pre-COVID assumptions on strategic fit, on value creation, on organizational compatibility to really confirm the deal rationale. And what we're seeing is that boards and investment committees really need to understand the impact of COVID-19, as Jacques mentioned, because some things are permanent and some things are not permanent, but also ESG considerations on the transactions. And again, we're seeing very disciplined acquirers conducting very robust due diligence, including detailed scenario analysis, addressing a multitude of commercial, operational, cultural, and financial variables. And it's not, some people say I paid too much or paying a high price for this deal. That doesn't mean necessarily overpaying, paying a high price. It just means that you have to put more rigor, more discipline in your value creation strategy. Go for it. It puts a little bit more stress, obviously, on management. And what we're seeing at PwC is our clients are using a lot more data analytics combined with commercial due diligence, using a lot of industry experts, and we're helping our clients recognize new opportunities to grow revenue and grow EBITDA. And really that's where the decision to make the deal or not make the deal really happens. And what we're also seeing is, for years, deal makers have said, we need to identify the key employees before an acquisition, right? And we've all seen that in LOIs and so on. But what's interesting is that the studies show that 100% of deals that fail to create value, in those deals, more than 10% of the people they had identified as keepers have left, right? So back to Jacques' point on key talent and how that's so important in the value creation process. So it's one thing to identify the key talent, but just make sure you incentivize them so that they stay, because if more than 10% of them leave, you're going to be very challenged to create value. We're also seeing some deal makers starting to discuss non-traditional sources of information, such as resiliency and purpose, ESG, so coming to the forefront more and more in transactions. So that's kind of what we're seeing, Maria.
Are you seeing that also in the mid-market space? I look at what we're seeing that comes across our desk on the financing side. when you're talking lower mid-market, or they're not as organized. And so is this a way that PwC can step in and sort of educate the sellers,
Absolutely.
the customers?
Our value creation offering used to be almost 100% targeted to private equity funds. More and more entrepreneurs are using it before going to market, so that they're talking to us now a year or two before going to market, so that we can actually create value before they exit. So it's not just a private equity thing. It is actually very much aligned to entrepreneurs now, and more of them are using that expertise to create value for their shareholders. And Maria, this asking questions thing sounds like fun. Mais tu dois poser une question à Jacques.
Go ahead.
Jacques il dit oui. Jacques il dit oui. And Jacques, I got a question for you. Like, you're coming up on almost like 40 years of success at Novacap, and congratulations on that amazing success. But today, with the arrival of new players in the Canadian marketplace, the private equity market in Canada is a little bit more competitive than when you guys started 4 years ago. So, can you share some elements of the Novacap strategy that you have to kind of remain on top?
Sure, that's a good question, because I'll accept it. For sure, we will be 40 years old in October 21, and with sixth generation of funds, we've demonstrated the robustness of our business model. But we can never stop and sleep on our laurels, as the world is changing fast, and for one thing, COVID has demonstrated that whatever you can expect, worse can happen. So we really have to be prepared all the time. To maintain our leadership, we have to continue to build our firm. We'll introduce new funds in new sectors down the road, small cap being the top of mind, because it's our origins, and we've had great success in the past with small cap. Although it's a highly populated area, we know that we would bring a lot of value there. Debt funds or other types of funds could be looked at. We could also expand geographically. We started in Montreal. We're in Quebec and Ontario, opening an office in New York. We could continue our Canadian expansion and eventually a US expansion. For sure, we'll continue to invest in our talent and in our HR. 5 years ago, we had 1.5 billion of assets under management. In addition to the investment teams, we had legal, finance, and accounting teams. That was pretty much the way we were working together. Since then, we've added a lot of additional talents and types of talents in our organization: HR, investor relations, biz dev, financing, operations, which focuses on things like helping the teams to create their playbooks, etc., communications, IT, etc. So it's important to continue down that path to make sure that we've got the support internally. And yes, Nicolas, we will continue to use professionals to help us out in that, so there's no worry there. But we are still, I believe, a well-kept secret to many business owners, and business owners are our key target for sure. So we want to increase our visibility, our brand recognition across Canada by demonstrating our sector-specific knowledge, providing thought leadership along those verticals, continue to enhance our biz dev by developing stronger relationships with specific third parties, which will allow us to increase our velocity, improve our efficiencies, etc. And for sure, we'll continue partnering with successful entrepreneurs. There are ones that go through processes, and there are the ones that go direct. We want a piece of both. And the guys that want to go direct are a long-term, as you know, to get a customer at price or anywhere else, Nicolas, you have to work on them. It's the same for us if we have an entrepreneur with which we develop a lot of good bonds. They may decide that the same price or even on a level playing field, I want to go with Novacap because I know them and I trust them, etc. So we have to work on all those cylinders, if I can say.
Ah, ben, merci, Jacques.
Now, because you asked me a question, maybe I can ask you one. I'm allowed?
Why not?
Of course.
In terms of advisors, we see, you know, more and more American firms coming to Canada, and investment banking in particular, you see a lot of them. In the same vein as your question, what's your strategy to ward these foreign investors or advisors off and maintain a leadership position in Canada?
Well, first of all, thank you for saying that the PwC has a leadership position in Canada in the deal space. I appreciate that.
I thought you said that.
I would say, I think 3 words, Jacques. I would say commitment, relationships, and trust. So commitment to the Canadian marketplace and commitment to excellence in client service delivery. Relationships, like we feel we've got the best deals team in the country with strong relationships with entrepreneurs and corporates and private equities and lenders. And those relationships matter and are very important to us. And then on the trust, I would say we'd like to think that we've earned the trust of the deal-making community in Canada. And we take a long-term view when we give advice. Sometimes we give advice to the clients that is, you know, it's the good advice for them, but it's actually not always in the best interest of PwC. Like if we have a sale mandate and we say you should wait 2 years to sell, we don't take a short-term view. We take a long-term view with our relationships, and that's how we build trust with our clientele. And I would say the other thing that I've noticed, some private equity firms and some entrepreneurs do want to have a U.S. boutique because so-and-so went to did their MBA at the same school as the corporate development person, or they have a few tombstones in that space. We actually had a co-advisory role this year, selling a business with an M&A shop from the U.S. And none of us like co-advisor roles. Like we all think we can do it together. Like none of us like it. We do it because the clients asked us to, and then we say it's better 50% than zero. But at the end, so we were working on behalf of the seller. The buyer told us that they felt that the U.S. boutique was not representing the client's interests, and they were actually starting to position themselves with the buyer for future deals before the deal closed. So you know, we live here. Canada's important. You know where I live, Jacques. Like there's a relationship that matters. So I think that's the best way that we can you know, keep the U.S. firms, the boutique firms, away from our market.
Yeah, that's really well said, Nicolas. So I see we're coming on 12:47 right now, and maybe just to wrap it up to allow people to actually ask their questions. But to either of you, either Nicolas or Jacques, you know, maybe some final insights that you can share in regards to the M&A mid-market outlook for 2021, and maybe even what industries remain attractive in your view, where you would expect active deal making to continue.
I'll let Nicolas start.
Okay, well, I would say I think in Canada we are really in the golden era of private M&A, and I think it's going to be true for the next decade. I think the demographics are right. We've got you know, good economic prospects structurally ahead of us. A growing ecosystem of deal makers in the private equity space, labor-sponsored funds, family offices. A new generation of entrepreneurs looking to conquer the world too, which is there's a lot of entrepreneurial spirit in Canada. So I think you couple that with low cost of capital, increased confidence in business, high level of liquidity. I think you know, we're going to be in a good spot for many years to come. I think to the second part of your question, the sectors that will be hot, I think technology will remain strong. People want technology that they can use and feel and touch and increase their productivity, and I think that's critically important. I think the food and beverage sector will remain extremely strong because it's proven to be recession-proof, COVID-proof, China-proof, name it. I heard Monique Leroux yesterday talking about the industrial council that she led for the Canadian government, and could Canada have the goal of feeding the planet? Would that not be like a fantastic goal? And could our ag industry, could we invest more there? I think there's going to be a lot of consolidation in certain sectors that have been hit hard by COVID. So it's going to create opportunities for the companies that have the stronger balance sheets. And I think that we're going to see, as Jacques mentioned, on supply chain, some deals where we've also noticed as part of this COVID situation that our pharma and medical industries are not fully integrated in Canada. We need to be able to build PPE here. We need to be able to build vaccines here. We're going to suffer some of the consequences of that, and I think that's going to change in years to come. So that would be my quick outlook.
Well, that's great. Thanks a lot. How about you, Jacques?
Well, I agree with what Nicolas said about the sectors he's identified. I would say other sectors that I see, financial services, I think we're pretty fortunate to have raised financial services at the time we raised it. I see that there's a lot of consolidation in the smaller and mid-sized businesses in that sector. That's a booming activity in Canada, and there's a lot of room for M&A in that sector. Distribution, Canada is a wide country, and it's always been a good sector. I think it will continue to be a strong sector. Personal care, we've got healthcare, but personal care for sure will continue to be good. I agree with Nicolas and Monique Leroux that agriculture is a great opportunity if we want to seize it. Other things that I see, maybe security, which will become, an increased. It's already a preoccupation, but I think it will increase. Services to the aging population, although some of it is dependent on governmental. I think there is some room there, and there is a market out there for that. And the last one, I would say, I don't think it's been identified as a sector yet, but cocooning, not services, but products for cocooning and work at home will probably continue to grow in the coming years.
Wow, that's great. I don't know what cocooning services would be, but I'm going to Google that later and see. Maybe I'm already using them. But so thanks so much. It was so informative and insightful. I actually had a great time. You guys are great. We talk about relationships and success in business and success in being able to buy companies and do them in a very thoughtful manner, disciplined manner. It's just it starts with the fundamentals, which is really relationships. So Lorraine, I know if you're on the line, if there are any questions from the participants at this time.
Yes, Maria. So we receive some questions. So I can start with a question in French for Jacques. Jacques, pouvez-vous nous dire un peu plus sur l'intérêt de Novacap dans le small cap industries deal size?
So we our interest on the small cap side, for sure, like I mentioned, it has been the start of Novacap. We started with 8 million of funds of assets under management. I was not there at the time. I was probably in kindergarten, but it started with 8 million, and we grew, and most of the 21st years it was a lot of small cap deals. Small cap today needs the same kind of attention as the big cap, and they need to be more organized, etc. Threats are everywhere, so we've been in that area a long time, and I think we can have a great success. There's a lot of opportunity. There's a lot of competition. In small cap, not only is there the small cap PEs, but there's the family offices that are interested. There's the institutionals like Fonds Solidarité, Fonds d'Action, etc., that are interested in minority positions. But there's a lot of room there, and there's a lot of potential for it's also, I would say, a greeting or feeding ground for bigger funds. So that can be of interest. And we've got resources that could dedicate themselves to that, or get some good experience in the small cap before joining bigger cap funds. J'espère que ça répondait à la question.
Merci Jacques. Je vais poser une question cette fois-ci pour Nicolas en anglais. For PwC, what are your views on the disconnect between the stock market and the real economy? What is the impact on mid-market M&A valuation and capital deployment?
So I think if I understand the question is, the person is saying like in the real economy doesn't feel so robust yet the stock market is so high. And I think if you actually back out 8 stocks, whether it's Apple, Amazon, Tesla, Google, Salesforce, a little bit like I showed on that graph, the markets have not rebounded as much as it would appear. Like those 8, in Canada, we have Shopify. So all of those securities have really pulled the markets upwards a lot more than the rest. So I think that's where the disconnect comes from. I think it also comes from governments all over the world buying up all the paper that's available. So therefore, equities are basically the only thing left for investors to turn to. And it's also creating a supply and demand issue on equities. So that's how I would explain the disconnect vis-a-vis what the person is describing as the real economy. And I think the impact on the mid-market is actually pulling multiples upward in the mid-market.
Merci Nicolas. So now another question in French. Nous entendons depuis 10 ans que nous aurons 40-50 000 entrepreneurs qui céderont leurs entreprises et ne l'ont toujours pas fait. Le feront-ils en 2021? Et dans la même question, est-ce que le ratio de 10 acheteurs pour 1 vendeur marché PME au Québec?
Clairement une question pour Jacques. Ça.
Je peux répondre à la première question, la première partie, si j'ai bien compris. Moi, à l'Assemblée annuelle de Novacap, il y a 10 ans, j'ai présenté une slide, je m'en souviens encore, qui disait « Les entrepreneurs sont vieillissants. Ils sont sur le point de vendre leur entreprise. » Puis il y a 9 ans, je faisais la même chose. Puis il y a 8 ans, je faisais la même chose. Puis il y a 7 ans, j'ai dit « Je vais arrêter de présenter la slide. » Mais ils s'en viennent. Puis ça a pris du temps. Mais ils sont tranquillement, ils s'en viennent. Quelqu'un qui avait 65 ans il y a 10 ans, il y a 75 ans aujourd'hui. L'entrepreneur est plus coriace à rester au sein de son entreprise. Il a du plaisir, probablement. Puis c'est sûr qu'il il cherche pas nécessairement à vendre. Il y a peut-être des problèmes de succession. Mais je le vois de plus en plus. Là. Dans les dernières années, on a fait plusieurs acquisitions d'entrepreneurs qui étaient justement prêts, qui ne l'étaient pas il y a 10 ans, qu'on aurait pensé qu'ils auraient été prêts il y a 10 ans. Mais aujourd'hui, on est jeune longtemps. Alors,
il y en a de plus en plus, je suis d'accord avec toi, Jacques, on en voit de plus en plus, mais il y en a encore beaucoup qui n'ont pas vendu. Puis je pense que c'est ça la question, c'est que ça fait 10 ans qu'on en parle, puis on n'a pas vu nécessairement une grosse vague, mais moi, j'en vois de plus en plus dans des entrepreneurs qu'on penserait qu'ils ne vendraient jamais. Puis, il y en a qui ont vendu en 2020, puis il y en a qui vont vendre en 2021.
Oui, c'est vrai. Il y en a de plus en plus. On n'a pas le choix. Le temps, c'est quelque chose qu'on ne peut pas arrêter.
Merci. Prochaine question. For Nicolas, in the smaller IB firms, we see a definite trend towards a stronger presence by the bigger firms such as PwC. Is this a strategy? Have you set up teams to address the lower mid-market?
So I would say that's where we started. So I started doing deals back in 1992, and we were lower mid-market M&A boutique. And through the years, we've grown our deal size, and now we work on more on the upper end of the mid-market. But we've never given up on the lower end of the mid-market, because at PwC, when a client is with us for 20, 25 years and the entrepreneur decides that he or she is going to sell, we don't tell them, well, go across the street, you're too small for us. So we support our clients from the beginning all the way to the end. And so that's why we're still in the lower mid-market as well. So our range of transaction has gotten bigger as the team has gotten bigger over the years. But it's nothing new.
Merci. Thanks. Jacques, can you talk more about the strategy to open an office in New York? Is this mainly to attract US investors, or is the firm's goal to have a larger footprint in the US-based business and headquarters?
That's a good question. Yeah, you hear me? That's a good question. Two things for sure. There's a lot of investor potential, a lot of LPs that are in New York, etc. But we wouldn't move to New York just to get the capital, because as I mentioned earlier, we can raise it virtually. But it is a good environment. I would say that the first area where it is important is probably on the TMT side. The TMT has raised essentially 1.8 billion US. That's a lot of money for a Canadian fund. And there's a lot of opportunities here in Canada, but the size of the fund will require them to go south, and being there is a good thing. It so happens that right now our New York team is composed of two people, and Gordon Hargraves, which is a investor relations person, so he's right there where there's a lot of investor to meet. And the other one is one of our partners, Ted Mukarski, which is on the tech side, is a partner. So for sure, he has brought a lot of US deals to Novacap. And we believe that there's potential for growth. And as we grow, we're preparing for that next step. Of course, if I look at industries, our play in general is to acquire most of the time a Canadian business, mostly in a given sector, and grow in the US. So from 1-2 plants in Canada, we will end up with 8 plants across North America. So having down the road some feet on the ground in New York or elsewhere is not a bad thing also. But I would say the first place is tech is where there's the most immediate appetite. And on the financial services, they are quite busy. There's a lot of things to do in Canada at this stage.
Thank you. One more question. How much do you think that the heavy problem in some specific industries like leisure, cruise, hotel, restaurants, or transportation like airlines will impact negatively the general economy in the years to come, so we might fall into a recession and beneficiate M&A for cash-rich company?
I'm not an economist, so I cannot give the best answer on that. But I think that people, as soon as we get out of this pandemic, will start again to travel. Now, the last time we were in a crisis, it took 7 to 8 years to make it back up to where the levels were. People will be more frileux, or they'll be more scared to travel in the current environment. That's for sure. But I mean, the human being is a very resilient animal, and has some limit to his memory, and the fact that they love to travel, they love to do all these things. So it'll come back, but it'll take a certain time. We are invested in a business which does, provides furniture for hotels. So for sure, we've got a business that right now is looking at a lesser appealing environment. But we know that there will be hotels for a long time. And we know that especially the ones by the side of the road, so the road travelers will continue to travel and will continue to go sleep in hotels. So it'll come back up. That's for sure not an area where I would invest tomorrow unless there's a great deal to be done. But
there's pent-up demand, though. Like what we're seeing is that when things do come back to some form of normality, I think everybody wants to get on a plane and travel and go somewhere, and people are so we're seeing that a lot of pent-up demand. But to the question that was posed, I think it would also create some opportunities, because those that don't have a strong balance sheet might not make it through without government support, and therefore those with stronger balance sheets might be able to consolidate certain sectors. So it is going to be somewhat of a shift in wealth. If you think of restaurants, for example, the restaurant owner might throw the keys at the landlord and say, well, I'm done, I'm tired, I can't do this anymore. The person the landlord will not convert the restaurant into something else, and somebody's going to pick up the leasehold improvements on 10 cents on the dollar, like very good living, but the wealth will have been displaced from the first owner to the second owner. So that industry is not going to die. It's going to come from the previous.
I guess that's
owner,
the history of restoration, where there's always a movement in the wealth. Where I see the most impact is probably in the business travel, where we've discovered these teams, etc. We are still not mastering the mute button, but there's a lot less travel that will happen in regards to that. That's where it's going to hit.
So, Bram, do you want us to keep going for the whole afternoon, or do you want us to stop it?
I have a question which maybe could be a short answer to Maria and to Nicolas, I guess, which is, for some years now, we've been hearing, I think it accelerated with Trump, with the Buy America policy. So Canadian firms were, in order to combat, issues and border issues, they were setting up plants in the States or setting up operations more than they would have if things were totally open between the two countries. And I wondered if you see that trend increasing and how it affects our Canadian business and employment.
So ladies first, Maria.
Well, I can tell you from our customer base, and yeah, we've seen our clients establish, depending on the industry, but we've seen our clients establish plants in the US. It's not new. They've been doing it for years. So in terms, for us, in terms of lending to these companies, as long as they have a Canadian footprint, we're able to accompany them. So I'm not sure if that answers your question, Bram. Was that?
Yeah.
And what I might add to what Maria said, and I agree with her, is what time has shown us is, and especially in the negotiation of the new NAFTA, is the two economies are intertwined. So even if Biden can only go so far on Buy America because the supply chains aren't built that way, and the corporate America is going to say, well, wait a minute, this is going to cost me a fortune, and this and that and the other. So we have to come to the realization that we're committed to this partnership with the U.S. because the two economies are so much intertwined. And I think there's only there's going to be feuds, and there's going to be protectionisms, and there's going to be tariffs and the likes, but it can never flip all the way back to closed economies because they're too much intertwined.
Yeah.
Maybe Laureen, one more question, and then we'll close.
Okay, so the last question is just a specification regarding Jacques' presentation. So the question is, do we understand correctly that through Novacap thinks the small cap market is interesting? There are no near-term plans for you to enter?
Cannot answer that. We've been focused in 2021 on COVID and in 2020 on COVID and 2 fundraisings. I would say that we will enter strategic planning in the course of 2021, and probably small cap is one of the first areas where we will look at. Now, environment issues can make it move one way or another. The key thing to start a fund is to have the right people to lead the fund, and that's where we will be focusing initially, for sure. But there's no time frame, and there's no. We did not have a time frame either for financial services. But as soon as we decide we start a book, not long after we'll be on the road, but it's not dead in stone right now.
I'd like to obviously thank you very, very much, the three of you. This has been more than interesting, but I'll let Maria thank our two presenters properly. So Maria, I'll hand it over to you.
All right, I think my mic is on. So I just wanted to say thank you very much to Nicolas and Jacques. It's given me an opportunity to actually know them a little better, and they have a great relationship and a good chemistry. But thank you for supporting the M&A Club and for sharing with us your insights, which are extremely valuable because you're key players in here in Quebec and also in Canada. So I just want to say thank you for supporting the M&A Club.
Thank you, Maria. Thank you, Maria. Thank you, Jacques. Thank you, Nicolas. I'll just say a word about the M&A Club. You know, we're positioned more and more, and particularly as a mid-market private transaction organization. That's what we discuss at our meetings. That's the core of our membership. Except, of course, it's funny when it comes to the M&A Awards Gala, because where we you know, award different categories. There's 8 or 9 categories of winners in all segments of M&A and financing, but many of these deals remain private, and Pricewaterhouse, of course, has contributed in that way, and so has Novacap, but remain private, but they can be up to $1 billion or even more. So the mid-market, you know, sometimes gets a little expanded, but it's our place, and that's where we position ourselves. And we're going to continue with these webinars. We have 2 more this week, one tomorrow, one Thursday. One tomorrow's in French, one Thursday is on the digitization, if I got it correctly, of mortgage lending, which is a $1 trillion industry. And it's a whole new angle. We don't discuss mortgages because for me, mortgages are sort of a personal thing, and it's not really in our wheelhouse to discuss mortgages, but this firm came along and with a very unusual value proposition, and that's on Thursday. It's a firm out of Toronto on what's happening with the digitization of mortgages, which is pretty interesting. Anyway, thank you all again, and remember the webinars are open except for one guest appearance to members only. We also run in those 54 that I mentioned, with 54th today, we run monthly M&A Club Connect meetings, which are virtual roundtables, and we encourage all our members to join. We also have, by the way, Nick and Jacques, 40 pages of a deal listing that goes out every 2 weeks, and it's amazing some of the deals in there. Some of them are quite large, actually, from our members. So we would encourage you to get your teams to look at that and contribute. You're all members. And bonne continuation. Thank you very much.
I'll take care of that, Nicolas. Thank you, Bram. Sorry.
Okay. Thank you, Bram. All right. Have a nice afternoon.
Merci beaucoup.
Yeah.
Merci.